If you had 650,000 to invest in property and you were only looking at capital cities, where would you put your money in? Today I'm going to look at 3 capital cities, Perth, Brisbane and Melbourne, and I'm going to look into one LGA in each one of these cities and let you know whether it's worthwhile investing in these areas for under 650,000. So before I get into this video, I want to introduce myself. My name is Jadhu Srikandan. I'm a buyer's agent for property investors. I help investors buy in undervalued regions all around Australia using a data-driven approach. So if you want me to handle the entire process for you, then go to my website propertyframeworkbuyersagency.com.au and book a session with me there. Now let's get back to this video. Before diving into these LGAs, let's have a bird's eye view of how Perth, Brisbane and Melbourne have been performing. Now looking at this data from CoreLogic, it's very clear that Perth has been the best performer over the last year. Perth prices have increased by 24.7%, while Brisbane has increased by 16%. Melbourne has been clearly lagging behind with only 0.2% growth. Looking at the growth over the last 5 years, now this one shows for all the capital cities in Australia, you can see that Perth has been the best performer at 76%, Brisbane at 71%, while Melbourne again has been lagging behind, only 19.8% growth over the last 5 years. So Perth and Brisbane have been going very strongly over the last 5 years, while Melbourne has been stagnating over the last 5 years. Looking at the stock on market change, again, stock has reduced by 21% in Perth. In Brisbane, it's still fairly constant. It's reduced by 0.8%, while in Melbourne, the stock has actually increased by 12.5%. Now you should take note that it's not all the suburbs in Melbourne which would have that stock increase. Some of them would have a significant increase while some would not. So you will have to dive into individual LGAs to really find out which ones have had massive increases in the stock. And the last chart here shows which segments of the market in each capital city has been performing well. Now we're looking at the lowest, the affordable ones, the middle ones and the more expensive ones. And if you see Perth, it's been the affordable segment of the market, the 25% of values, the lowest 25% which has been performing very well at 7.6%. If you look at Brisbane, it's again the lowest segment of the market which has been performing well at 5.6%. In Melbourne, all 3 segments, the lower segment and the upper segment of the market have not been doing too well. Okay, now we've got an overview of the cities. We clearly know that Perth and Brisbane are moving forward strongly, but Melbourne is not doing too much. So now we're going to go into 3 different LGAs there. I'm going to look at the city of Armadale in Perth. I'm going to look at Ipswich City Council in Brisbane, and then in Melbourne I'm going to look at Brimbank City Council. Now in all of them you can find freestanding houses with fairly decent blocks of land for under $650,000. I'm going to look at things like past 1-year performance, 10-year performance, the affordability and the current market conditions, like how the data is looking in each market. Okay, now first let's get into the city of Armadale. Now in the city of Armadale, we have a median price of $662,000 for a 3-bedroom house. If you look at the 1-year performance, you can see really strong momentum. Prices have increased by 27% over the last year and rents have increased by around 24% over that same period. So really strong price and rent momentum in the city of Armadale. You can buy a double brick home for around $580,000 to $600,000, which would be on a fairly big block of land, like 600 to 700 meters squared, and some of them might even have subdivision potential, and that would rent out for about $550 per week, which means that you're getting very close to 5% rental yields. So really strong rental yields in Armadale. If you look at the past performance, over the past 5 years, Armadale has grown by 85% and the 10-year growth stands at 61%. Now let's look at housing affordability in Armadale. Now what housing affordability means is that if you allocate 50% of your income towards mortgage repayments, how long is it going to take for you to completely pay off that loan? So a typical housing loan in Australia is about 30 years. So if it's going to take you more than 30 years in today's interest rates, that means that it is unaffordable and that you're starting to allocate more than 50% of your income towards mortgage repayments. So in Armadale, you're starting to see that affordability is still getting stretched a bit, but it's something that you have to take note of. It's not the only indicator that will determine the price movements. Okay, now let's dive into the market conditions in the city of Armadale. The first important one is the days on market. So the days on market has been reducing steadily in Armadale since 2020, and it's now sitting at 29 days. So that's really heated. Okay, it can't get more heated than that. There has been a slight uptick on the days on market, but nothing too significant or anything to seriously worry about here. In terms of the housing inventory, we are sitting around that 3 months of inventory, which means that it's a seller's market and market conditions are really hot here. House listings is steady around that 300 listings. So all of them combined tell me that it's a very heated market in Armadale. The only slight concerning point is the vacancy rates. I see an uptick in the vacancy rate over the last few months. It's still around that 2 to 2.5%, and it will be only be concerning if this vacancy rate goes about 3%. So keep a close eye on that vacancy rate. The city of Armadale still looks promising in terms for the short-term price growth. It's only that vacancy rates is starting to move up and investor activity is increasing in that market. So something to take note of. Now let's move away from Perth and now let's get into Brisbane. So I want to go into Ipswich. Now we actually analyzed Ipswich in much more detail in previous videos, so please have a look at that video to get more insights in Ipswich. Today I just want to talk about how the Ipswich market is performing overall. So the median house price is 650,000. In terms of the 1 year performance, we are seeing prices increase by 14.3% and rents increase by 8.82%. So we don't have the same momentum that we saw in Perth, but still good enough steam in this market. You can buy something here for around 650,000. You're looking at a fairly standard brick veneer house on a decent block of land, which you can buy for 650,000 and rent out for about 520 per week, which gives you a 4% rental yield. So rental yields are much lower than a Perth, because you're getting 5% in Perth. In Brisbane, it's only 4%. Then looking at the past growth, you can see it's done much more than Perth. Over the 5 years, it's done 95%, and over the last 10 years, it's done 127%. So that's a bit of a concern there, that 127% over the last 10 years, how much more can it really go? That's the question. Now, if you look at affordability, again, similar to Armadale, the housing affordability is slightly stretched in Ipswich, and it's sitting close to 40 years. So that's very common when you have a lot of price growth happening like you've seen in Ipswich, right? Now let's dive into market conditions. So again, I'm seeing a very heated market. Days on market has been steadily reducing from 60 days all the way till about 20 days. So a super heated market in Ipswich. We're seeing housing inventory under the 3 months, which means that there's not much stock available, and that available stock is moving very fast. There's going to be a lot of competition for properties. Prices will go above asking price, and you will have to kind of pay above asking price if you wanted to secure something in Ipswich. House listings is around steady, around that 400 at this stage. Okay. Looking at the vacancy rate, we're seeing the vacancy rate, it's sitting around 2%, so it's not too high, not too low. It still hasn't reached that level where you have to be overly concerned. You only have to be concerned when it starts to move above that 3%. So vacancy is still very good in Ipswich. So summarizing Ipswich, it's a very heated market, and I think that you will have to kind of really compete with other investors and first home buyers to buy something here. The only concern is the 10-year growth, which is sitting at 127%. So we'll go into that detail and then analyze that further when I do the summary. Okay, now let's move into Melbourne. We want to go into Brimbank City Council. Now, Brimbank is located northwest of Melbourne. It's only 25 kilometers from Melbourne CBD. We have median house prices here sitting at 720,000. Over the past year, houses have increased by only 0.16%. And over the past year, rents have increased by 13%. So significant increase in rents, but house prices haven't moved as much. You can buy something here for around 570,000. There are suburbs like Deer Park, Albanvale, Delahi, Armadale, for example, where you can buy a 575,000 which rents out for 450 per week, and the rental yield again is at 4%. So very similar to a Brisbane, but you have to take note that Melbourne has land taxes, but when you compare it with Brisbane, it's lower in terms of council rates, lower in terms of property management fees, and even the insurance. So when you look at it holistically, Melbourne might still be better from a cash flow perspective. Now, looking at the LG of Brimbank City, over the past 5 years, it's only grown by 18.90%. And the last 10 years, it's done 75% growth. So clearly underperformed over the last 5 years. And even that 10 year, it's not something that, I would say has grown too much. It's still within that reasonable level of 75%. Affordability is still at 45 years, so similar to Melbourne, similar to Perth and Brisbane, and we're still seeing it stretched. Now let's delve into current market conditions here in Albanvale. The days on market is sitting steady at 30 days, but the inventory is around that 4 months. It hasn't gone below 3 months. So that means we are still not in a seller's market. We are kind of in a neutral market where houses are growing at asking price. There will be opportunities for you to negotiate. The listings again sitting around that 400 and not doing too much. The interesting thing here is the vacancy rate. So vacancies have steadily dropped and it's now sitting under 1%. So a significant drop in the rental vacancy rate, which you can see in Brimbank City Council. To summarize, it's a market that's very stagnant. You can negotiate and find properties under market value, but these conditions won't remain the same for too long. That's why we're going into this summary now. Now, summarizing all three markets, right? Perth has had 60% growth over 10 years. Brisbane has had 125%, and Melbourne has had around that 75% growth over that 10 years. So clearly Perth is sitting really low as far as that 10-year growth is concerned, and it has more room to grow over the next few years. But at some point that affordability will come into question and the market will start slowing down. I'm expecting things to slow down maybe in 1 to 2 years. With Brisbane, with that 125% growth over that 10 years, the question is how far can it go? And therefore Perth will have a slight edge over Brisbane just because of its price momentum and the fact that it has not had too much growth over the past 10 years. So looking at short-term growth, Perth would be the best one over the next 2 years. But if you're investing over a longer time horizon, then the picture completely changes. Perth and Brisbane would start plateauing out in the next 2 to 3 years, and then Melbourne, the Brimbank City Council, which eventually start picking up because we're seeing vacancy rates dropping, we're seeing some sales volume starting to increase, and then eventually when we see that inventory and that stock getting reduced and getting absorbed quickly, we would start seeing price momentum coming in Brimbank City Council. That area cannot just sit at 500 to 600,000 being just 25 kilometers away from that CBD. So after 2 years or even before that, there will be price momentum kicking into Brimbank City Council, and over that 10-year period, that market will do really well. So it really depends on what type of investor you are. For short-term growth, probably still Perth, but you have to take note that it might plateau in 2 or 3 years. for that 10-year horizon, Brimbank, the Melbourne, is looking really good. Okay, so I hope you found this summary useful. Please like and subscribe if you found some value in this video, and I'll see you in the next video.